Hey there, it's Nick Doherty from Forest Hill Real Estate, and today I'm going to be going over something that I often get asked. How do I calculate the numbers on a rental property? So this is actually going to be part one in a four-part series where I'm going to be going over the basics of how to calculate what we're going to have to come up with to actually invest in the property. Part two is going to be going over the expenses on the property. Part three, we're going to be going through what the mortgage payment's going to be and what potential cash flow there's going to be. In part four, we're going to be going over the return on investment, which is the most exciting part. See how hard your money is actually working for you. So let's get right into it. Part number one is actually finding out how much you're going to be investing in the property. So how do we calculate this? How do we know how much we're going to actually have to come up with to invest in the property? So for example purposes, I actually used the amount $350,000. Let's say you're purchasing your first investment property and you're going to be spending $350,000 on the purchase price, right? That's the first part. Okay, we got the purchase price, it's $350,000. Well, how much do I actually have to come up with? That's the financial information. Now this works a little bit different than you would normally with your primary residence. Your primary residence, you can have a loan to value up to 95%. That means you only have to have 5% of your equity in the home. Well, investment properties work a little bit differently. When you start getting into investment properties, because you're getting higher leveraged, the lender will want to see that you have more of your own equity or more equity in the deal. So with an investment property, it's going to be closer to 80% loan to value, meaning you will have to have 20% equity in the deal. So what does this actually mean for you? This means that if you're purchasing a property for $350K, the mortgage will be $280K. So how did we come up with that number? We basically took $350K times it by 80%, and that gives us our mortgage amount of $280K, which actually leads us into our third point, is the investment total. So we've come up with an amount here. I've already predetermined this. It's $77,675. How did I come up with this number? We know we purchased for $350,000. We know that it's at 80% loan to value, so our mortgage is $280,000. So that leaves us with $70,000 as a down payment. But as we all know, just like when you purchase your home, there's other fees that are incurred. So you want to count these into your investment because it's your equity going into the deal. So we also have other expenses like land transfer tax. In this case, I've done a rough calculation of $3,275 for land transfer tax. We're also going to have lawyer fees that come up, which roughly around $1,500, give or take. Every lawyer is a little bit different. And then you're going to want to have the property inspected. So we're going to say about $450 to make sure that the building or the investment property is sound and it's in good shape, and we want to move forward with the deal. And then also, I've written down here a miscellaneous fund. This is just a little bit of a fund that you keep in there just in case something were to happen. It's a little bit of a buffer, a safe zone for, maybe something comes up or it's a little bit more of a major fix or a tenant moves out, but you have that buffer. So we always keep a little bit of a buffer in there. And in this scenario, I put $2,000. So that gives us a grand total of $77,675. Now, why is this number important? Well, now that we know that we require $77,000, roughly $77,000, this gives us a starting ground. Do we actually have that money? Do we have to partner with somebody? Do we have to save the next 2 years to come up with this money? And if so, then we can kind of plan ahead of like, hey, I have this much income coming in, I'm gonna have to put this much aside. Or do we have to go out there and find a partner? Do you find a family member? Do you find a friend? So once we have this number, we actually can start to determine, okay, well, if I'm halfway there, I could probably invest in this property, in a half a year from now or a year from now. Or if I partner with X amount of people, then we can come up with that capital to invest in the property now. But this gives you the starting ground, the foundation. You're aware of how much you actually require to invest in this property. Now, I trust that after going through this and us coming up with how much we actually need was very beneficial as the foundational ground for investing in a property. As I had mentioned before, this is part 1 in a 4-part series. In the next video, we're going to be going into the revenue, or the rent that will be coming in monthly, and the expenses that we're going to incur, and some of the hidden expenses that you might not expect that come up with owning a rental property. We're going to get right into that. We're going to be coming up with one of the most important metrics that I believe in real estate investing is your net operating income. We'll find out if this property is actually sustainable. And then from there, we'll figure out how much cash flow. Does this property actually cash flow? Does it not? So these are the numbers we're going to come up with to actually determine if we're going to want to purchase this property. And after that, we're going to get into also figuring out in the 4th part our ROI, which is the most exciting part. This is actually why we're doing this. What is our return on investment? How good of a return is this $77,675 working for us? How hard is it working for us? Kevin O'Leary actually says he wants his soldiers, the money going out, to be working for him. So how much of our 77,000 soldiers going out working for us, how much is that actually coming back, and what is our return on investment? If you found this video beneficial, please share it with a friend, comment below, ask any questions below. I will answer, and I look forward to seeing you on the next video. So please stick with me, and I'll see you next week.